Welcome to RAST. Most investment tools bury you in thousands of KPIs, numbers, and chaotic candlesticks charts. We do the opposite. We strip away the noise to focus on two things: actual value and potential growth. Our goal is to give you only the core information you need to make an investment decision. And here's how it works. Let's look at Meta. At the top, the current situation gives you the bottom line. Is the company currently overvalued? We assign a hype score, which is the gap between the market price and our calculated value, and a growth score, representing Meta's remaining potential. In the illustration, the gray bar is the current market price, and the purple one is our estimation. The difference between the two tells you by how much the company is over or undervalued. Meta seems to be currently overvalued since our calculated value sits below the market price. Since we don't actually have a crystal ball, our members have access to different valuation scenarios. We provide base, worst, and best case scenarios and a nerd mode where you can adjust the parameters yourself. Most charts on the page update instantly to reflect the chosen scenario. In Meta's case, we can see that even in the best case scenario, it seems to be overvalued. Right below, the Quadrant section helps you visualize where the company sits relative to its competitors. It's the quickest way to see if you're looking at a bubble zone or an undervalued gem. Meta is currently close to the bubble zone, meaning that it combines a relatively high level of overvaluation with a limited growth potential. Next is the valuation history, perhaps our most important chart. It combines our key calculations to compare the market price, in purple, against our calculated value, the yellow confidence interval. In Meta's case, look at Q4 2022. When the market panicked over metaverse spending, the price dipped well below our estimation. In hindsight, that was a clear buy signal. Today, the price has corrected so much that it moved into overvalued territory. We obviously can't predict when a correction will happen. It could have taken Meta 3 more years to come to this level. But history shows that prices eventually return to our confidence interval. That's why we expect Meta's price to eventually come back down to our interval if they continue with their current strategy. Of course, if they launch a massive disruptive new product tomorrow, such as insane AI-powered AR glasses, that unlocks more profitable revenue streams, that's a different story which is on you to guess. Further down, we analyze the engine of the business, or in other words, the specific way a company generates money, aka our secret sauce. For Meta, the key revenue driver is daily active people. Our algorithm uses an advanced S-curve model to predict future growth. Why? Because no company grows forever. They all eventually follow a natural S shape as they saturate the market. Changing scenarios change the prediction. You can also try different growths with the growth forecast slider in the nerd mode. Keep an eye on the wheel indicator, which shows you how accurate the prediction is. Our best guess is highlighted by the star. You may wonder, what makes this our secret sauce? Well, for 2 key reasons. First, this type of data is rare. You won't find these specific metrics visualized like this even on a Bloomberg terminal. We manually identify and collect the specific revenue driver for every company because what drives Meta isn't what drives Tesla. Second, we use this data as the foundation for our valuation. If we know how many users Meta will have in the future, and how much each user brings to the company, we can calculate exactly what Meta should be worth today. User growth is only half the story. You also need to know how much the company makes per unit, or in Meta's case, how much each user is worth. That's where the ARPU, average revenue per user, in purple and margins, in pink, kick in. The dotted line represents the max net margin, the theoretical ceiling for profitability based on the company's cost structure. For Meta, that's around 40%. In nerd mode, you can adjust the profit margin to see what value the company would have depending on its profit margin. And you can change the future growth of ARPU with the revenue slider. In Meta's case, a future growth rate of 3 to 5% should be realistic given its past growth. The revenue per user is calculated by using publicly available data. We take the revenue and divide it by the number of users. The product maturity section tracks R&D and capital investment. This is especially relevant for tech companies. When you see a spike, like here in 2022, with Meta's 2022 pivot to AR by even changing its name, it means the company is trying to unlock new revenue streams. Obviously, we can't guess if they'll succeed, but knowing this indicates that more revenue per user in the future is possible. Finally, you might be wondering how accurate our model really is. You can check this in two ways. First, the valuation history shows you what our confidence interval looked like in the past. And no, we never go back and fix our old data to make ourselves look better. What you see is exactly what the model told us at that time. Second, the retrospective growth function lets you travel back in time to see exactly what growth we would have predicted at any specific date. For example, if we look at Meta back in May 2022, we can see that while our base scenario was a bit too pessimistic, the actual growth stayed clearly within our confidence interval. Finally, check out our ranking section. Updated every week, this is where we track the most undervalued companies across all of RAST. It's essentially a leaderboard for potential opportunities. Now, this feature is only available to our pro users. But hey, that's how we're able to stay completely independent and ad-free. It allows us to keep providing you with neutral, objective data without any outside influence. Thanks so much for your support and for helping us build this community.